Hello, everyone. Good morning, good afternoon. This is the Alpro's webinar on the state of the semiconductors market. This is the first webinar of the series. I'm Aniela Guedes from IDC, and we have done a lot of the research that you're going to see published in the platform. I've been managing this research together with my colleagues from IDC, and I'll do here just a short introduction of our panelists and also of our content here, just on the purpose of having the agenda exposed to you before we jump into the real content with our brilliant experts today here. So first of all, I would like to start with our speakers. We're going to have Stefano Selleri, who you will meet in a couple of seconds. He's going to be doing the introduction on behalf of the EC, and he has a lot of expertise working on the semiconductors area. He's a professor, but I'm not going to, let's say, take too much of our time introducing him. He'll introduce himself better than I can do here. We're going to have also Martina Wolfgrupper. She works for Infineon, and she's going to tell us a little bit about their work with the EU projects, talent, and skills. She's also going to introduce herself. You're going to see that there are a lot of activities happening in this area to foster the semiconductor talent market. Also, we're going to have Richard Barnett that will speak about the supply chain challenges. He works for Siemens and for Supply Frame, so you'll learn about their systems, you'll learn about the data that they're working with and the solutions they have for the semiconductors market, but overall for the supply chain that involves this industry. And finally, which is our first speaker, actually, we're going to have Mario Morales, which is our IDC master expert in semiconductors. He is the VP of the semiconductors group, and he's going to start his presentation telling us numbers of the market, so the shares that we have in the market, how the market is growing, how many units are being produced, and the overall trends for the market in the next 5 years. Also, he's going to talk to us about trends, about the growth of AI, and about European companies that are doing a lot in the sector. So with that introduction, we're going to have first Stefano, then we're going to have Mario speaking, Martina, and finally Richard. At the end of our presentation, we're going to have also Silvana Muscella speaking here for us on behalf of the consortium, Alpro's consortium, and how we can get engaged with the consortium. So with that, and no further ado, I'd like to invite Stefano to start his first remark.
Thank you very much for the presentation. I hope you can hear me well. And indeed, it's a pleasure for me to be here. I am, as you said in the presentation, actually I am a professor in Parma University in Italy, but now I'm working, I've been working for a few years in the Commission, in particular in DigiConnect, in the unit on microelectronics industry and photonics. Okay, giving in few minutes an introduction about the policy of the European Commission in the sector of semiconductor is very difficult task, but I would like to focus first on the CHIPS Act very quickly, and in particular on the CHIPS GU. And then I will try to enlarge, giving you some information about the package that has been approved just last week by the Commission that can have an important impact in the sector. First of all, about the CHIPS GU. Actually, the CHIPS GU can be considered like the one of the operational arm of the CHIPS Act. And I can use just a few words to design the importance of the future and current actions that the CHIPS EU is putting on the table. First of all, virtual design platform. The idea is, of course, to reinforce the design capacity in Europe by providing design platforms that can be accessed to our industry and SMEs in particular. The second point is related to the development of new pilot lines. Then we have the development of quantum chips and also, of course, the possibility to expand skills and set up a network of competence centers. Let me come back to the pilot lines for a while, because this point is another very important point. Because we have already launched the call for 4 pilot lines, and the call was launched the 1st of December last year, and this call will be open until the 28th of February. And as you know, we are focusing our activity on 4 pilot lines. The first one is related to the FDSOI technology. Then we have another pilot line on leading edge nodes below 2 nanometer, another one on packaging, heterogeneous integration and assembly, and the last one on wide bandgap semiconductors that would be fundamental for power electronics. So this call is already open, and indeed with these pilot lines, we aim to provide the user with a common state-of-the-art European test, experimentation, and validation infrastructure. And we would like this infrastructure to be, let's say, accessible to a broad range of users across Europe. Let me spend just one word very quickly also about the network of competence center, because one of the main points related to this network is skills. So the idea of addressing the talent gap that we have in Europe, but this is a global problem, as you know, and the idea, of course, if we want to create a new facility across Europe, if we want to improve our footprint, if we want to increase our share in the market of the semiconductor sector, we need, of course, also people, skilled people. And this is one of the main tasks that the competence center has to consider as the main object of their activity, one of the main objects. I cannot avoid to mention Allpros in this activity, of course, because Allpros is one of the CSA helping us in this regard. Also because the skills should be one of the thematic working group in the future alliance, industrial alliance, that we hope to enact very soon. Has been already announced by our commission in a few occasions in the past. Now, let me put all this activity in a framework, in a wider framework. This is a framework of the economic security package that has been approved, as I said at the beginning, just last week by the Commission. And this is important because the security, protect and enhance and increase the security in Europe is one of the main points our politician has in mind. And the semiconductor is one of the critical, let's say, it's not critical, it is a critical, but also very delicate sector that we have to take care and take into account. So actually, this package that has been approved is built on 5 different initiatives related to, let's say, 5 wordings that I can repeat very quickly, so you will immediately understand the meaning. Foreign investment, export control, outbound investment, dual use technology, and research in security research. So these are very important topics. Just to give you an idea, I can touch upon some of them. For example, for what concern foreign investment, you know that the European Commission is screening all investment made by foreign companies in Europe, and in the past 3 years, we had more than 1,200 transaction, foreign direct investment transaction, that has been notified to member state and which has been assessed also by the European Commission. And we have a strong expertise in this now. And this is why we should streamline the process. We should try to build on this experience, for example, in order to harmonize the national rules, and also, for example, to control investment by EU investors that actually are not, as I say, are controlled by business or individuals that are
Stefano, I'm very
eventually.
sorry. I need to interrupt you for
I'm going to finish. I'm going to finish, and this is
yes, please.
and this just to give an example of the very important activities that we have to do in this respect. So for also of the other activities that I cannot, of course, describe in detail, we would like actually to work together with other member states, with the European Semiconductor Boards that has been just established, in order to coordinate our activity and actually behave like a union as much as possible. Thank you for your patience.
No, no, thank you. And actually, we have people here in the chat asking if you're showing slides, and I don't assume you were, but exactly they want to know more information about that. So where they can find this information, if you could share that with us, and we'll have it registered here. So if you could share the link with us or anything, I assume it's all in the EC Commission or any other page related to semiconductors that the European Union has established. We have some news on the All Pros website, but yeah, we have people interested here, so this is good news. Thank you, Stefano. And now I'd like to open the floor to Mario, who will start the presentation from our IDC side. So I'll leave the floor to our semiconductors guru. Good presentation.
Thank you, everyone. Good afternoon. Let me just put up the presentation. I hope everyone can see this.
Yes, but if you could put on presentation mode, which makes it bigger, that'll
Yeah, there we
be
go.
best. Perfect. We can see your screen perfectly.
Thank you, everyone, and thank you for joining us today. I'll share some background on the semiconductor market outlook. I think that we're in an interesting time now where we're seeing a tremendous amount of investment at a worldwide level, and we believe that some of that investment will definitely drive and accelerate this growth cycle that we just begun. When you look at the space, what I want to leave you is with some key takeaways. But before I begin, I think we left last year basically marking the bottom of the correction that we've been experiencing over the last 20 months or so. I think if you look at we're just beginning earnings season now for the semiconductor industry, and TSMC has already reported, and Intel reported late last week as well. And we can clearly see there's definitely some momentum building again for the semiconductor industry as a whole. So as we look at this space, the key takeaways I want to leave you with is that we believe that the industry has reached the bottom of the correction. There are some exceptions now where if you look at the automotive space, if you look at the industrial space, these industries were a lot more resilient than some of the traditional market segments like PCs, smartphones.
Mario, sorry. Can you switch your screen? Because we had see the presentation, but not in the. I think you're using a double screen. So,
okay, let me see if I can. Can you see it now?
yeah. No, we still see. You should switch the screen now. So I think you're presenting in screen one, and you should be
Okay.
presenting in screen two.
Okay, let me
Or
see if
you
I
can
can.
take it. I mean, you can just make it bigger.
Okay, let me try again. Okay, this is as big as I can make it.
Just 1 second, everybody. We're
Maybe
going to.
can you run the presentation, Aniel, and I can just speak to it? Would that be okay?
I'll see if I can do it.
Thank you, Daniel.
Yeah, perfect now. Thank you.
Okay, so I'll continue here. I appreciate the feedback. Let me go back to the previous slide, please, Daniel. So I talked a little bit about the fact that we reached a correction. I think one of the key things that we're seeing now is that the semiconductor market continues to be very foundational in terms of technology, and it's become just a lot more important than ever. Not only are we continuing to see the semiconductor content grow across the board and in a very pervasive way in many different industries, but there are certain markets that are now beginning to take fold and displacing some of the traditional markets that we've been accustomed to supporting, especially when you think about PCs and smartphones. These two markets have traditionally driven about 45 to 50% of the total semiconductor market. But as we look out over the next 5 to 7 years, the markets that become much larger now are going to be the server area, or what we encompass as the data center. I think you're going to start seeing data center revenue surpass $100 billion over the next year and a half or so. And when you look at the automotive space and the industrial market, these two segments in the next 7 to 10 years will represent a third of the total semiconductor market moving forward. So we do believe that the semiconductor industry will double over the next decade. We believe that will happen sometime in 2032. But the compound annual growth rate of the total semiconductor market will be about 5.3%. And we fundamentally believe that the next tectonic shift that we've seen in this industry, like we did with cloud, like we did with mobile, is going to be AI. And it's not just about AI pursuing the large language models in the data center, but it's really more about AI inferencing, moving more across the edge. Next slide, please. So other key areas, I think that when you continue to look at investments, we're going to continue to see a scaling amount of investment because the industry as a whole continues to move and become a lot more complex, both at the leading edge, but even in mainstream and mature nodes. And I think what's become more important for everyone is the fact that we have to protect, we have to be able to scale and maintain a very resilient supply chain, especially as we continue to see this path where the world is moving and the nations are moving for more technological sovereignty. We believe that billions of connected devices at the edge will continue to double in volume over the next 5 to 7 years. But what's even more critical is the fact that these devices are going to continue to generate a lot more data. And we believe that over half of all the data created will actually live more and more on the edge. And what that means is that over time, we're going to see a tremendous amount of growth for AI inference. And I think that's going to be the next marker, the next driving factor where you're going to see a lot more competition for the industry as a whole. One of the things that we learned during the pandemic and soon after was the fact that the supply chain became a very critical space overall, and we couldn't really move any other markets without supporting the supply chain. And as we look at this space and we look over time and we think about all the various initiatives around the world, one of the things that remains very important is that the materials area, the design space, and even assembly and testing markets are going to become very, very strategic spaces. Today, a lot of the CHIP Act money is really focusing on front-end manufacturing, but you're going to see a big shift over the coming years where more and more investment has to also be made in these areas, especially as you think about regulation changing in the materials world, when we're thinking about rare earth materials, all of these different things that are really critical to the potential growth of this space. So you're going to see more initiatives in this area, companies in this space beginning to think about what new materials they invest in order to continue to drive the engine of growth for the semiconductor industry as a whole. We think that the OSAT area is a very interesting space, and we're seeing a lot of investment today, not as much as we thought we would see from the OSAT companies, but more from the chip companies themselves, where they've realized that in order for us to continue to move the path of integration, we have to move from monolithic integration more to advanced packaging integration. And so because of that, design and OSAT and EDA, all of these different areas are going to continue to get a lot of investment in order to drive the next level and next evolution of integration. We think that there's a tremendous amount of opportunity today. A lot of the news and the press tends to focus more on compute. We look a lot at GPUs and AI accelerators, and of course, CPUs, but there's so much growth that to be had, especially in areas like memory, sensor, performance analog, power, optical, many of the spaces where I think Europe does a very good job at having a very strong and solid position in terms of technology and position in the market overall. So we do believe that these areas will continue to grow, even though we see faster growth in a sector like AI accelerators or GPUs that are driving a lot of the large training models today. These large digital chips will continue to be surrounded by all these other technologies, and that's where we see the potential of growth. One of the other areas that we continue to see is that a lot of these technologies, whether it's power or analog, or you think about some of the microcontroller areas, they've been very strong staples in the operational technology industries. And as those markets continue to electrify, to continue to use a lot more of these technologies, you're going to see a more rapid growth in that space over time. I talked about the data center space. We're just beginning to see the beginning of a really big transformation there, where the systems themselves are moving from general purpose servers that typically cost about $10,000 to these AI-based servers now that companies, especially the large cloud service providers, are spending $150K to $200K per system. And so the level of semiconductor content will only continue to explode in this space over time. If you talk to specific names like AMD or Intel, they'll tell you that these markets over the next 5 years will be anywhere between 250 to 300 billion in size. And then finally, I think one of the big things that we've been waiting for a number of years now is a replacement cycle in two of the larger sectors, both smartphone and PCs. And we think that the combination of some of the new generation of computing architectures coming from the ARM world, but also from what AMD, what Intel is doing, and even what Apple is doing, will help stimulate and infuse AI, which I think will begin to drive a replacement cycle later this year, but really accelerating as we go into 2025. Next slide, please. So looking at our outlook, as we look at the space, we definitely began to upgrade the market last summer. We saw positive year-over-year growth beginning sometime in the June timeframe, and we thought that by the end of last year, we were going to start seeing quarterly year-over-year growth. So we went from down 12 to 13% for the market in 2023 to down 11 to 12% in 23. And as we look at 2024, we've been consistent with our outlook. We think that the semiconductor market will grow about 20% this year. A lot of it really due to a recovery in ASPs, and also because we're continuing to see semiconductor content, but the demand side of the equation will begin to gradually grow. Going from the PC market that declined close to 14% in units to growing about 3.5% will help the market. Same with smartphones, but we are clearly seeing an acceleration now in the space. We do believe that it will continue well into 2025. Memory prices are also beginning to recover, and I think that's been an important driver of that. So I'll go to the next slide, please. As we look at this, our key assumptions is, again, we're seeing better visibility from the long inventory correction that we saw in PCs and smartphones. Again, an accelerating demand for AI servers and AI-enabled endpoints. And we think that that's going to drive a lot more semiconductor content. When we think about Moore's Law driving change in our industry every 18 to 24 months, when we look at the AI space, the amount of change that's happening is occurring every 3 to 4 months. And I'm talking about the large language models and the amount of investment and change that we're seeing there. So there's a growing gap between the hardware and the software, and most companies are pushing very hard to narrow that gap. And that's driving, of course, a lot more semiconductor content overall. We think that the automotive and industrial areas remain with some elevated inventory, but these two industries were very resilient during the correction that we just went through over the last 20 months. And we do believe that those markets begin to return to normalized levels as we get to the second half of this year. And on a longer term basis, we still believe that that electrification, that the overall industries as a whole in the OT space will continue to transform, and that bodes well for semiconductor content as a whole. We think that technology and transitions are driving a lot more semiconductor content, and the value across each of these market segments will improve as we go through this year and forward. And we do believe, as I mentioned earlier, the increase in memory ASPs, not necessarily because demand is exploding, but the memory companies hit a level where they were not making any profits and they were operating in cash costs. So late last year, we began to see the companies just arbitrarily begin to increase prices. And we do believe that the market will then begin to uptake more and more memory over time, especially high bandwidth memory. We're seeing a lot of adoption of that in AI systems. The capacity and pricing will remain flat. We do believe that CapEx will likely, best case, remain flat this year, especially from the perspective that a lot of companies are still recovering from the downturn that they experienced late in 22 going throughout 23. But we do believe that the industry as a whole is trying to really adjust and become more aligned with where demand really is. And we think that a lot of the CHIP Act incentives will stimulate investment on a longer term basis. Just as an example, we know in the US, we've earmarked $52 billion of investment, but companies have already reached over 180 billion of investment that they were planning to make over the coming years. And so we believe that the tax credits, just like we're seeing today in the EU and around the world, will continue to stimulate a lot more of these companies that are driving investment in this space overall. So as you look at the semiconductor space, this is our forecast. You can sort of see that we expected last year to be down to about 489 billion euros. And as you look at this space, we're expecting to see a growth of about 20%. Now, keep in mind that last year, the memory market was down more than 40%. So that was one of the key reasons why we saw such a large correction and shift in revenue. As we look at this year, we do expect that market to recover and grow about 40%. But what was consistent was that the logic area, even though we saw a correction, it only declined by 4.5% to 5%. And we think that we'll continue to see heavy investment and pretty solid growth over time. So as we look at 2027, we're looking at an industry that equals about 720 billion euros in size. Next slide, please. Now, one of the key things that I want to point out, and I think areas that the EU is very strong in, is the area of automotive and industrial. We believe that those two market segments will continue to grow at a much faster pace than the overall semiconductor market, because we're seeing the adoption of a lot more content in this space, but also the amount of software that's going into these industries is driving a lot more complexity, and that complexity will also begin to drive a lot more compute. And so as we look at this space, there are four big segments, and these are the four that we're outlining here, that are going to grow and surpass over 100 billion in semiconductor revenues over the next 5 years. We think that the automotive market begins to reach that at the end of the forecast period. Same for industrial. The data center will reach it much sooner, in the next 2 years. And when you look at AI, and we group all of the AI silicon together, that industry as a whole will get closer to 200 billion by 2028. And is growing at a compound annual growth rate of about 14%. So this AI silicon includes not only the discrete GPUs and AI accelerators that we're seeing in the data center, but it also includes many endpoint devices that are beginning now to infuse AI engines within those devices. And we're trying to extract as much value of that to be able to capture what the true size is of the total AI silicon space. Next slide, please. Now, Europe has been a key contributor in this market for a long time, and there are specific champions in this space. And as I look at this space over time, the trends that we're seeing today in areas like automotive and industrial are playing well to Infineon, NXP, ST Micro, and Siemens. We think there's a lot more demand for power semiconductors over time, for security solutions. When you think about the combination of microcontrollers, sensors, and power management, all of these are critical technologies that are going into the automotive space that continue to participate in the broader market segments as a whole. And if you look at the recent correction in the market, these companies all outperform the overall contraction that we saw in the market, even though they also were hit by the correction, because they focus in sectors like industrial and in automotive, their revenue and their share grew over this period of time because some of the other companies were hit harder by their concentration in areas like PCs and smartphones and some of the infrastructure markets that were hit very hard. So as you look at this space, the other big player in this area for Europe is ASML. They have a very strong position in the lithography area, and every major semiconductor company that is chasing the leading edge or chasing some of the mainstream technologies rely heavily on ASML and will continue to do so, because when you look at this space, we do see, of course, some traditional competition coming from Japan with Nikon and Canon, and a few emerging players out of China. At the end of the day, over the next 5 to 7 years, we believe that in this tool area, ASML will continue to hold a very strong position that it'll be hard for the other companies to achieve. Next slide, please. So one of the things I want to go out is I talked about the next 5 years, and I want to talk over the next 5 to 10 years. I think one of the key things that I want to leave you with today is that the economic value of the supply chain continues only to increase. You know, there's a big focus in our industry to hit $1 trillion in terms of semiconductor revenues. But when you look across the entire supply chain that supports the industry today, by 2025, that supply chain will hit $1 trillion in value. So we're going to see $1 trillion sooner than the total semiconductor market will. But we do believe that it's a very critical piece in order for us to be able to reach that number. We think that as we get to about $1 trillion in size, essentially the semiconductor industry doubles. And what that means is that the R&D will also need to double, and so will the capital investment. So when you look at the space today, you know, to support the, let's call it 500 billion in size for the semiconductor market today, we're spending over 100 billion in R&D annually, and we're also investing about 105 billion in capital spending and tools. And we think that those numbers will double when we get to 2032. One of the key points I want to also leave you this is that moving forward, and this goes contrary to what we're seeing today, the technology markets will continue to get larger. But one of the things that we continue to see is that the industries as a whole are becoming more interdependent and will force the industry as a whole to remain interconnected. And I think this is an important point that I'll bring up in a follow-on slide, but this is one thing that's going against a lot of the technology sovereignty that we're seeing today. AI at the edge becomes the next era driving technology adoption. And what we want to point out is that even though the data center has really captured a lot of the opportunity to date of AI training and what AI could potentially do, especially with the large language models, you're going to see a very big push of these large language models, compressed models, moving their way into edge infrastructure and into endpoints. And we think that's going to drive a lot of the market. And we believe that AI will actually be bigger at the endpoint than it is even today in the data center. So that's a big opportunity that everyone is vying for. And there is no incumbent player today in that space. Next slide, please. If you can build out this slide. This is what I meant to talk about earlier is that when you look at the semiconductor supply chain today, the economic value of this industry reaches about $1 trillion in size. And you can see, of course, that it's still made up of the industry as a whole, but the foundry space continues to grow twice as fast as the overall semiconductor market. Wafer fab equipment will continue to grow because of complexity about 11% over the coming decade or so. Materials as well. This is an area of concentration and an area where I think Europe will have an ability to differentiate in that space. Same for EDA tools and IP. These areas don't look that large when you look at 1%, but they are very fundamentally important. And you're starting to see now companies like Synopsys and Cadence make moves in this space because they're trying to broaden the reach of what their capabilities are to reach bigger market segments. And you're going to see some M&A in that space as a result of it. But in general, this is a very large driven industry of value and to continue to grow over time. As we look at the space, over the next couple of years, we've already seen about 83 fabs or facilities either begin construction or have been announced. And if you look at the EU 27, we're expecting about 14 facilities over the next 3 years to begin production or be announced. And this is a big investment that we're seeing and will drive change in the supply chain overall. We think that this is not only when you look at the value of each facility, but there's a lot of economic value that it drives overall with inside of the communities, the companies that are also investing beyond the investment by the EU, but they're also trying to take advantage of the initiatives that are in place. But we think that you're going to see a lot more initiatives in a shift where the supply chain is looking to become more balanced and not as concentrated as it is today in Asia Pacific. Next slide, please. When you look at this space today, if I were to take out memory, 100% of the leading edge is driven from Taiwan and Korea. But as we look out by 2030, we think that this will definitely shift. It'll shift to Europe, it will shift to the US and to Japan. And so you can sort of see the combination of these industries will drive almost 40% of the leading edge technology by 2030. So this is a very big shift that we're beginning to see, and it's going to drive the total value chain. So this is not just about front-end manufacturing, although this slide only captures the capacity. What we see is that the material market, the assembly and test, the advanced packaging, EDA, all these different pieces of the supply chain, of the value chain, will also shift. And I think this is going to be one of the biggest shifts that we've ever seen in our industry. And it bodes well to sort of trying to mitigate and create a very resilient supply chain over time. Next slide, please. So I talked about the next tectonic shift, and this is a build slide. But I want to talk about the fact that we've gone through these very big inflection points in our industry, from the cloud through the mobile evolution to the fact that we're now beginning to see experimentation leveraging generative AI. And not everyone's going to be using large language models, but many of the cloud service providers definitely see it as a point of differentiation. And as we look over the next couple of years, enterprises will begin adopting AI across their enterprises and across different types of workloads that they're using. And this will continue to move its way more and more towards the edge and to endpoints. And we believe we're going to see in the next 10 years this intelligent edge. And this is going to be billions and billions of devices, all with some form of sentient compute capability running AI inferencing. And in some cases, as we start getting beyond 2030, some of these devices themselves will not only just do inferencing, but they'll also be doing learning. And this is why I think when we think about the edge, when we think about AI at the edge, we believe it's going to be very disruptive, because we think it's also going to disrupt the cloud infrastructure that we've been used to over the last 10 years. Next slide, please. This is a survey that we did in the summer of last year, but we do this survey every single month. And basically, this survey is meant to capture what the pulse is and the sentiment is of decision makers that are investing IT dollars and where they're going with their spending, right? Because in some cases, companies have cut back. In some cases, they just reprioritize to areas that make more sense. And what we found is that a lot of the IT spending dollars are moving to workloads and applications that allow each enterprise to get closer to their customers. One of the things that we've been asking is, how are they using AI, or what type of investment are they making in AI? And you can clearly see by some of these numbers that only about a third of the industry, or actually less than a fourth, I'm sorry, of the industry has not done anything yet with AI. For the most part, most folks are exploring and trying to figure out what kind of use cases could take advantage of AI. And there are companies, about close to a third of the companies are already investing very heavily in generative AI applications. And this is data from 23. If you look at where they're going with it, a lot of it is going to be in software development, anything that optimizes the existing applications that they're using. They're also trying to leverage it on product design. Well, if they can use it to simulate faster and create the products and bring them to market faster. That's an area that they're going to be focusing on. And of course, customer engagement and being able to link and predict the supply chain issues along with finance. So you're seeing, again, some investment in this space. Next slide, please, Danielle. So what does this mean? What it means is that it's driven a very big shift again in the key architecture and platform that is driving Gen AI. And this is our previous forecast from March of 23 versus our October forecast. And our numbers are definitely changing every single quarter based on the earnings announcement of an NVIDIA or an AMD. But you can sort of see how rapid and how big the shift has been. We began to see this in the second quarter of last year, and it's accelerated where companies are just investing a lot more in driving AI workloads. And we're seeing also the adoption of AI server-based systems. And that's just driving the need for more GPUs, more CPUs as well. And the overall content of the market is growing very dramatically. But you can see it by the numbers that I'm illustrating here. I talked about this earlier, but I think it's an important point that as we look at the technology scale, these industries will continue to scale. When you look at ICT today, it's about a $5 trillion industry. But what people don't always know is that the operational technology industry is as large, if not larger, than ICT. Now, the total industry, the total semiconductor industry for decades has been driven by ICT. But as I look over the next decade, and I think this bodes well for many of the companies in Europe, we're going to see this big shift where operational technology industries are not only going to continue to transform and electrify, but they're going to drive a lot more partnerships that we had not seen 5 years ago. So you'll see cloud service providers work more closely with companies like ABB and Bosch and Siemens and Schneider Electric, all of these companies trying to leverage the AI tools that are being built, the platforms that are being built, but also trying to figure out how do they make sense of these technologies to streamline their own operations. And so there'll be opportunities for ICT companies and operational technology companies to be working together. In some cases, the automotive ecosystem, which is about 3.4 trillion in size, that will also see a lot more collaboration also with cloud service providers and, of course, silicon companies. And so this is the opportunity that we see today. We see a world where these industries are converging and are driving a lot more opportunities to engage and collaborate. And it also means that over time, these two industries, automotive and operational technologies, will drive a larger portion of the total semiconductor market industry as a whole. Next slide, please. So my calls to action. I think our industry continues to invest very heavily in order to drive innovation and prosperity. But one of the things that I want to point out is that we cannot compromise the established models that exist and that we've built over the last 16 years. I think innovation should continue to remain at the core, but there are certain things in the supply chain that just work very well already. And to try to recreate them is a recipe for disaster or for an inability to reach the goals that we set. I think supply chains will need to remain interdependent to scale and address the $100 billion markets that we see ahead. And, you know, one of the things we're doing with the CHIP Acts is we'll definitely see this, expect to see more resilient supply chains. But we have to manage this very carefully. And we think that the world will have to be interconnected in order to really achieve the opportunities ahead. I talked about the change that we're seeing, the tectonic change of AI, but pay more attention to AI at the edge. We think that edge infrastructure is only beginning to grow now, and that's going to drive a lot more endpoints. And that's where we see the AI opportunities moving forward. We need to continue investing in talent and access to silicon to sustain our industry's engine for growth. I think that this is an area that's often overlooked, but as we continue to automate and we think about how AI can be a technology to leverage, we cannot forget that we still have to train the engineers. We still have to train the software development teams in order for us to realize these opportunities. And if you look at the semiconductor profile of companies, when you look at R&D today, the majority of R&D that we're spending today is in software. So not only will we need a lot more engineering talent, but we're going to need a lot more software capabilities, because that's where we're seeing a lot more of the differentiation in the systems that we're addressing. So with that, I want to thank you very much for your time. That's my email address if you have any questions.
Thank you, Mario. Thank you. I would like to then thank you for the presentation. It was brilliant. And with that, I'd like to conclude our IDC part and ask Martina to come onto stage. We are going to hear from her, and we're going to hear from a European company how they are addressing talent, skills, and what's their role in the market. So please take the room, Martina.
Yeah, thank you very much, Aniel, and thank you very much, Mario, for this very impressive presentation. Mario, really raised the bar, but I'd like to close up and follow up with my presentation. So I will share my screen. I'm still not able to share as long as you're sharing, Aniel, so I try to.
Let me see if I can do it here. Now it stopped, right? Perfect.
Yeah. Okay, you can everyone see my screen?
Yes, it looks great.
Super, thank you very much. So let me introduce myself shortly. My name is Martina Wolfgruber. Hello, everyone. I'm here in Austria. I've been part of Infineon since 2011, and over the years, I had the opportunity to contribute to various roles, from people development, talent attraction, recruiting, talent marketing. And just a year ago, I embraced a new challenge. I'm ramping now and took over the so-called talent collaboration team. So yeah, that's what we are doing. I will show you today. And to me, I'm really delighted to be here with you. And it's a privilege to navigate you through our talent collaboration journey and to share some insights and also learn with you today. So yeah, some of you might know this picture already. So we are 2030, we are facing a huge talent gap. Yeah, this will be the moonshot moment. Then we will know if all our activities have been successful or not. So it is a challenge, yeah. And even Mario said, okay, semiconductor industry will double. So we also have at least double our talent, skill talent, let's say. And yeah, it's not just a threat, it's an opportunity for growth and innovation. And yeah, today demographic change, mismatched qualifications between semiconductor industry needs and educational sector are causing or is causing talent shortage. And in order to properly address these challenges, Infineon has developed initiatives and ideas to have an answer or to increase talent gap in the future. Yeah, and next slide. So yeah, I show you this picture. The future begins in the classroom. What do we mean with that? So Infineon is turning these spaces, meaning classrooms from the beginning on, into kind of launch pads for the next generation of innovators. So we are striving to cover the full range of target groups, meaning we really want to start at the beginning, in the kindergarten, in the preschool, school, and technical high schools up to students. But we are not only reaching out to students or children, we're also reaching out to teachers and to their parents, as we know that they have a high impact on decision, on job decision, educational decisions. So we have a proactive stance. We are establishing influence from day one. And yeah, let me show you how we do this. So just to create some picture in your mind, what do you or how do you envision the jobs of the future? What do you think? I mean, you might be in the audience, might be in the same area, microelectronics, semiconductor, etc. You might have the right vision of future jobs and future skills needed. But surprise, surprise, what is our current generation thinking, or the generation that will come? So they think on different ways. They the current data really indicates something different. I show you what the current data indicates. So it's not the microelectronic part and the microelectronic or semiconductor sector on the first row. So there are still some very historic job profiles in mind. Also, so what's the point? So the major tendency towards known and established job profiles, where we also see that teachers and parents are influencing a lot. So and why is it like that? Why do they have these pictures in mind and not becoming an AI engineer, an IT and an ICT specialist or something like that? It's because of this limited imagination about the diversity and the impact of our job profiles of microelectronics and semiconductors. So this is actually it's a different perception in families, and they are not aware and not familiar with the pathways. So and that's why this is something we really have to address, and where Infineon addresses it. And but only Infineon doing it, it might be too less. So that's why we think collaboration on an EU level is important to address those people, and to address talent shortage and skills gap for now, and of course also in the future. So another picture. So what did Infineon find out over the years in working with talent attraction tools and recipes? We found out, and within these collaborative projects we are doing now for a few years. So we think that influencing is inspiring. We have to be in field at the target group. So we really feel the power of influencing, and you really have the biggest impact if you know what is high in demand and what kind of areas will be demanded in the future. If you transport the importantness of our technology, of semiconductor technology and microelectronics, as we feel a day by day connection to those technologies, and this is what we feel as we are in the sector. But the perception in families and teachers and educational sector is more far away. So we really have to transport that the importantness and the impactfulness of green jobs in the future and now, and the jobs in technology. So we really our projects and initiatives always go with awareness campaigning and a high and a large set of marketing material. So we are not only trying to create new ways of learning or influence curricula. We also try to reach teachers, parents, and young talents with our job profiles and with our technologies. So people really have to feel where microelectronic is in a day-by-day life. So they really have to know that we are everywhere, but we think people that are not in this area don't really know this. So also future talent should feel the impact of these technologies, and also parents and teachers and parents, and we and every time we are in the field, we are at schools, we are in kindergarten, we are at the universities, we really see that they are absolutely not familiar with educational pathways. So they have a kind of picture in their mind. It might be interesting, but they really don't know how to access and how to go along with a proper educational path. So we have to bring also the pathways closer. And this is what we do with our collaborative projects. And this is what we also do with our talent attraction activities and with our awareness campaigning activities. So this is might not be new for you. It's just to emphasize that there is talent outside. They just have to know what kind of educational orientation they should go, and we have to start really early from day one when they're in preschool or school, and not only reaching out to talents, we also have to reach out to teachers and to parents. So this is a kind of slide for the sake of completeness. Everybody of you might, before we go into details, what Infineon is doing on collaborative projects and university relations. You might know Infineon already. So as I already said, this is a slide for the sake of completeness. I don't spend too many words on it. So we are a global leader in automotive and power management, energy efficiency technologies, and IoT. And beside this, we established in Austria a team which is really dedicated to projects that influences educational sector and creates awareness campaigning for the semiconductor industry in Europe to address a talent gap. So, and now let's dive into some details. So our approach to partnership is that the universities especially are really key. So so collaboration brings together, let's say, ideas and expertise for groundbreaking work. So we really have a lot of collaborations that were built up in the last years, but especially in the last months as we have established our team there, and our dedicated team, let's say. And why are we doing it? It is very important for employer branding, being at the universities, doing collaboration there. We do talent attraction tools and talent attraction there. We use all of our tools that are not unknown actually, and of course talent relationship from the beginning on. And not also talent related or recruiting related activities are set there. So we also have a startup ecosystem we will talk about later, and we use the space there also for business development, as we know that there are so many ideas created which lead to little startups we really want to develop and support. Yeah, and not and the last one is the innovation part. So we also have an excellent PhD program, and we know that IP is so important, and that's why we foster a PhD community and the innovation that is made within this community. Yeah. And there you see some at least from Infineon Austria, as I'm from Infineon Austria, I've brought some figures and examples for how we apply relationships and partnerships. So we really foster endowed professorships, meaningful for Infineon on European-wide universities. We are also part of IPSE, as you might know already, at an important project of common interest. We will talk about a bit later what we are doing here in spillover activities and a few more. So yeah, it's growing actually, and it is very important for us to have a set of collaborative initiatives with different partnerships. And from talent point of view, we have a selection criteria for key universities we apply. So it really has to fit. Sometimes it is not easy to reach out to universities, but we have our mission, and we really try to collaborate and embrace them and invite them. So we check the quality and the fit of technical wise of the university and the match to our Infineon needs. We also check hiring relevance as I mean, collaborative projects are mid-term, long-term run, and but we also we have short-term hiring needs, and we check the experience from previous collaborations, and of course for us it's very important to check also the international exposure and diversity of the partner or the key diversity. And out of that, this is a global, this is a global approach. So we had many student contacts. Not all of them are right away a recruiting factor, but these are kind of leads or contacts we are nurturing, and some of them are startups we foster or we support, let's say, and some people really we have really hired, but this is all this all leads to the invest we are doing with universities and student relation activities.
We're running a bit out of time, Martina. Can you?
Yeah, I hurry up. Yeah, we are
sorry.
in. Okay, sorry. Yeah, I'm quick. Yeah, we are investing in a range of initiatives, carefully selected, as you see, not only universities, also high school, and yeah, you see also our partners. So, this comprehensive approach ensures that we are not just reaching current trends, but we really want to achieve or actively shaping the skills landscape of tomorrow. So that's why we are doing collaborative projects, and this and the collaborative and the U is a good platform to realize these activities. So that's why we are also using it, and this is a great. And I want to show you an example of our one of our projects. It's Metis. Some of you might know, maybe some of you are also in a company of one of the consortium companies. So Metis is a great example of our commitment of closing the skills gap. So let's take a look of achieved results. So we invented or we created, or the team created more than 100 courses and reached out to maybe at that time it was 4,500 talents, but now it's more as we have this platform where people can do the training courses, many training hours, and which is also important, Metis reports results quoted in many external studies at like the like from PricewaterhouseCoopers and other really famous names. And we are nearly at the end, so I'm very fast. Yeah, important project of common interest. This is where we also contribute. We do awareness campaigning. We are realizing scholarships, university collaboration workshops, online events. So there we are European-wide on the road, and this is also a huge contribution to Europeans' resilience on semiconductor. And last but not least, if anyone is interested in how this startup ecosystem works out at Infineon, please connect with me via LinkedIn, or just write me an email. I would be happy to make a contact for you, as this is my colleague driving this very innovative ecosystem. And yeah, now it's kind of speedy. Lastly, yeah, I want to emphasize the importance of being proactive, staying optimistic, and approaching things with courage and energy. And I hope to have an interesting panel discussion with you. Thank you very much.
Thank you. Thank you, Martina. Yes, if you want to talk to her a little bit more, you can connect with her on LinkedIn. And now we're going to ask our last speaker, Richard Barnett, to talk to us about supply chain challenges. Richard, please take the stage.
Thank you so much. We're covering a lot of key content, and I think what really resonates as we kind of look at the broad sequence of discussions is that, you know, there's a global dynamic around the electrification and digitization of multiple downstream industries, experiences that, you know, is an exciting wave of constant innovation. But with that has meant, particularly as we learned from the global pandemic, there was a lot of revealed areas of risk and the need for greater resiliency comprehensively around particularly products, services that consume or have embedded electronic component content design, including specifically semiconductors and ICs, and that the investments that are being made both within the EU, but also globally in different regions, particularly in the United States, are comprehensive and trying to incentivize both the investment in semiconductor foundry fab capacity, but also IP innovation and the talent required at different areas of that opportunity for innovation and growth, whether it's within core manufacturing of semiconductors, within assembly test, it's in the software and IP design, or it's in the actual sort of advanced skills required to design in and manage those supply chains within, say, large global manufacturers within that are headquartered in Europe. So I'll be speaking a little bit with a focus around those supply chain challenges and the opportunities for resilience, and share a little bit about what we're seeing in the market that resonates with some of the earlier trends. So I'm Richard Barnett. I'm the Chief Marketing Officer and Strategy Lead for SupplyFrame, and we're a Siemens company. We were acquired 3 years ago, and we've been in the market for about 20 years, really grew up around the electronics value chain, working with semiconductor component suppliers, distributors, and then downstream contract EMS manufacturers and OEMs. And so when we look at the big trends, what we're seeing is this, significant adoption across multiple end markets. I think within Europe, there's kind of a specific focus if we look at, security and strategic impact in sort of aerospace and defense and in automotive in particular, because of the strategic nature of those ecosystems, but industrial and then just generally electronics, whether that's in data center or mobile devices, also huge, significant impact, both from manufacturing innovation base that's headquartered in the EU or in the Europe market, but also in terms of the consumer and demand markets that are driving consumption of these services and experiences. But what we've also learned is that, there's a constant and ongoing set of challenges that really need to be addressed more comprehensively, both across the ecosystem as well as within key enterprises. So one of the things at SupplyFrame is that we're sitting on the front lines of a lot of the dynamics that are occurring across demand, lead time, design intent, design trends that are longer lead time, like longer term outlook horizon of what's happening in over 160 different countries globally, and segmented into key in markets and commodity groups. So we're constantly seeing where there's both current and potential challenges and inflection points in the bulb effect, quick demand changes, inventory buildup, which we're dealing with generally across most of those commodities, but also the underlying risk for tightening markets and supply chain shortages. But we're also seeing and working both internally as Siemens, as a major broad portfolio of electrified content and for process factory automation, smart infrastructure, but as SupplyFrame also servicing the needs of other Siemens customers and partners, we're seeing increasing complexity. So you have product density and the depth of every new board and every new system is dramatically increasing year over year. And also there's shorter new product introduction windows and lead times because of competitive pressures and these new digitization waves that are creating huge pressure on completing and reviewing the full design and building up that supply chain. And with the supplier and partner ecosystem, some of the things that we've seen is high concentration of, say, multi-tier supply chains that have, large focus in, say, Asia Pacific, great overview in terms of like where we're seeing foundries, OSATs, which is in test and measurement activities occurring in a global way. But that value chain also extends into direct component suppliers outside of major semiconductor foundries, whether it's in passives like in ceramic capacitors, for example, or in diodes, resistors, and others. There's probably 27,000 active suppliers, and that continues to grow every day across 400 different electronic commodity categories. And the source of supply is incredibly globalized because it's not just where primary manufacturing is taking place, it's where distribution, it's where test measurement, it's where downstream design activities are occurring. And the other fourth key trend that we think is really important to look at is that it's not just about supply chain resilience around continuity of supply. It's about thinking about the life cycle of new product design and designing in the best trade-off decision making across cost, risk, and a composite risk view, and also increasingly in the EU and globally, but the EU is really leading the way, is considerations around sustainability. And that new trade-off decision making is going to increasingly be difficult given the increasing volatility in the supply markets and the underlying pressures to innovate quickly. So what we see is a great opportunity for innovation, but also increasing pressures as we move forward. And one thing I just emphasized, and different analysts have covered this in different ways, but we have tracked this with multiple partners like Alex Partners in Automotive and others tracking this, that we lost $1 trillion in lost sales in market revenue in about 69 different industry verticals, automotive being sort of the most visible in a lot of ways because of the traceability to those impacts. And while the market has stabilized and we're getting back to capacity, particularly in automotive, et cetera, to meet forward demand, there was incredible lessons learned that went to the C level of many companies and sort of to the almost consciousness of most consumers, kind of having peak supply chain awareness, because you're aware of this underlying issue or these challenges that came to the top. And we talk about sort of the lack of awareness in kids and education around the opportunities in advanced electronic design or IP or advanced skills in this area. We also didn't have, I think, the quite awareness and understanding that we're all connected into this global supply chain and what those challenges might be. And this is a cartoon I think is really funny because during the COVID pandemic, we saw this come out, and it was digital transformation is years away, and you have this COVID-19 wrecking ball. And what we saw coming out of COVID was a few mixed responses. One was a lot of heroic firefighting. Teams were chasing parts globally. Executive teams were flying in to try to meet with multi-tier key semiconductor suppliers that they may have never negotiated with directly before, even the foundries like TSMC. And you saw this new agenda emerge around how do you really get to the root cause and not just fight the symptoms. But I think collectively what we're seeing across multiple end markets is that shift in getting to rethinking what's happening, how do we make sure we avoid these challenges in the future. We've only made incremental gains. We've sort of transitioned from firefighting, but now we're just getting to the point of really going deeper around process, decision-making, incentive management, and new forms of agreement to share risk or manage risk pooling in the ecosystem overall. And so I think the timing is right now for leaders to rethink those relationships and for everyone in that ecosystem to think about their role in supporting a move to greater resilience, not just for the enterprise or the company, but really across the industry overall. A lot of the data that we've seen has been significant, where we've seen broad surveys that we've done with different partners. 48% across multiple industries, have experienced delays in product launches. 45% saw increases in overall product costs and cost overrides. And the other thing that's really interesting is that you have these kind of redesign cycles that were occurring, which were really exceptional. And this meant that engineering teams had to go redesign existing products, the respinning they call it, because of availability issues. And this put a huge pressure on the engineering capacity of many of our customers around how they manage and think through, for example, designing in alternates or more flexibility in the design so that they don't have to go through a full redesign cycle. And we've also seen that 39% were replacing or updating components for every PCB board level project. And this level of change and density of the electronic design is something that has been unprecedented before. And many industries and many companies have sort of in Europe have taken different approaches. I mean, we've already seen the European Chips Act sort of in tandem with the US, Japan, Korea, and others began to look at digital sovereignty, but also look at just incentives and a comprehensive plan to build up both foundry capacity and improve localized sources of supply. We believe broadly that has been helpful because the more diversity of sources of supply that we have reduces the overall risk exposure, if you will, across different dimensions of risk, whether that's geopolitical risk, et cetera. However, the global electronic supply chain, if you look at it sort of end to end, remains increasingly interconnected to the point of, decoupling, for example, et cetera, is almost astronomically difficult and hard, upwards of $3.5 to $5 trillion over 5 years to just decouple from, all of the electronics sort of manufacturing supply and IP ecosystem capabilities and recreate that in different locations, whether that's in broadly the EU, US, or other markets. And major automotive companies, for example, in the EU have really led the way, I think, in a more comprehensive approach. This is just a couple of headlines from like Volkswagen Group and Stellantis, but every German OEM, for example, and broadly in the EU, has begun to really relook at how do they orchestrate their multi-tier supply chains, where they may have turnkey outsourced a board level design at a tier 1 or a tier 2 supplier. Now they are trying to get visibility to all the embedded content, all the board designs, and then where the risk exposure is that's buried in those designs to, for example, design out legacy node analog IC content, which is not really where the new fab foundry capacity is really coming into play. It's really on the latest node, which is only addressing sort of the needs of certain end markets that are kind of on a constant, the latest maturity and miniaturization needs, like in mobile phones, for example. Automotive and industrial, which are larger industry footprints in the EU, actually need to have a broader, more balanced approach. So sometimes that's redesigning and orchestrating overall redesign activity. Sometimes that's supply chain visibility, managing long-term agreements with key suppliers. And sometimes that's having a more of an ecosystem-based approach for sensing when risk is occurring and then rethinking how do we buffer or manage buffering that risk rather than having globally in the automotive industry an over design that's been institutionalized over 50 years of just in time, just in sequence, where electronics were viewed as fabricated parts and where there was an amortization of the sort of economy of scale over 3% cost reduction every year over 5 years has been the mindset. But we're treating that same model to IC and electronics component and design, which doesn't make sense because that's not how the market moves from the design costs and where, the sort of risk is in the life cycles of all those different parts and components. So there needs to be a fundamental rethinking, not just by companies, but by industries overall. And just augmenting some of the analysis earlier around, the supply and end market demands, which we think are overall very healthy multi-year. At Supply Frame, we have this network of insights across demand, cost, lead time, et cetera, and design. And for the Eurozone, one of the things that we've seen right now, just in the near term, is a significant relative ramp down in both near-term demand and new design activity across multiple electronics commodities groups. Now, this will see a recovery though, because we're seeing this being driven by both an inventory glut in the market that needs to be burned down, as well as macroeconomic pressures, inflationary pressures, uncertainty around end market demand, et cetera, that is slowed down overall portfolios. But it's important to note that this will remain a very cyclical market. What's interesting to note here also, though, is that the relative demand we think is going to turn around in 2024 to get back to pre-pandemic baseline index levels in demand, but in design, we're still healthy. We're still 20-30% above what the overall design activities were pre-pandemic. So we're seeing increasing, sort of forward pressures, but the road to growth and the road to the sort of innovation adoption in these key end markets will be very uneven and paced differently. And what we're seeing is, sort of industry and end market use cases competing for design and demand of same common components and ICs to a large degree. And so it's not company versus company, it's sort of industry or ecosystem versus ecosystem competing for the underlying demand that'll be increasingly constrained. So I'll just kind of share a few words about getting to the root cause of these challenges, because I think they're really important for strategic thinkers that are roadmap planning or thinking about their direction in their organization. We need to get to the root cause. And the risk management approaches that we were managing or doing before are no longer sufficient. So the idea of, looking at part life cycle information and designing in a component or an IC, that may have an 8-year life cycle is no longer good enough, because we need to understand the supply market dynamics as well. That same component or key components within the same board might be, significantly constrained. I mean, we saw lead times go up 63 weeks in some cases. Now that's come down, but we're still seeing volatility of weeks of movement of lead times across key commodity groups because the new demand is constantly being allocated against constrained capacity and supply, both at foundry, but also across multiple other, sort of commodity groups or commodity sort of electronic components. The other thing is that inside the enterprise, we've seen this real siloed problem of companies that are doing engineering in a silo, sourcing, and then supply management in silos. And so oftentimes is linear and sequential, and they would throw it over the wall and say, look, just for the next design or for the next new program, this is what we're going to need, go execute. And the same intelligence that decision-making was based upon was not shared equally across those different groups. So one of the things that we're seeing is that there's been this over-reliance on looking in the rearview mirror saying, well, this is the last time we costed that part. This is the last time we negotiated with our maybe tier one supplier. Here's what we think the lead times are. But most of that data and information is wrong and inaccurate. We need a new approach that's more agile, more shared ecosystem intelligence, and more shared decision-making across these different functions. So when we look at this redesign cycle, this oftentimes happens. In one case, one of our customers, it's headquartered in the UK, but has global operations, had up to 60% of their entire engineering team capacity used for 2 years on redesigning existing components for home products. Let's say they're sort of a consumer electronics brand. And they had to delay a lot of their fundamental new product innovation because they didn't have net new, engineering capacity. The only good news with this shared pain, though, is that brought a lot of stakeholders from engineering, from supply chain and procurement in these organizations together to really start looking at the root cause of the problem and how they can begin to do things differently. And one of the key shifts in thinking is this movement from looking at not just the sort of symptoms, but the underlying disease. And when we look at in the Eurozone, there's a lot of dynamics which are both local to Europe, but also global in nature. And so both need to be taken into consideration. And so we need to balance and pull in greater external market intelligence that looks at inventory, price, what's happening in markets similar to the markets that they're in terms of design intent. Sometimes it's better to design the most popular component in so that you think that it might have the most available capacity and supply. In other cases, if you're a low volume manufacturer, you may not want to be competing with other OEMs, for example, that are designing in chips for very high volume, like mobile phone launches. Those millions of, say, phones forecasted to be delivered can be 1,000 to 20,000 to 1 the volumes of an automotive company at the same launch. Same components can be used in both designs. And we call this design to source intelligence network, this new way of looking at things across supply frames network, but we apply this to broadly Siemens as well. And the way that we're looking at this intelligence is trying to predict and have contextual insights that look at risk, both at the supplier and the part level, looking at design intent, demand and supply dynamics, cost and volume, and increasingly, again, building in this Rubik's Cube, if you will, of thinking about trade-offs, not just when do we design in an alternate part or supplier, but also increasingly, what's the relative risk score of that product? And then now that we add sustainability, what's the CO2 or the emissions target goals, et cetera, in the rolled up product as built or as sourced in that full view. And increasingly, we're going to be making these more multi-dimensional complex trade-off decisions across different groups. And one of the things we're also seeing in general is that the most mature European manufacturers and our customers are leading the way. They have a shift in their overall procurement, sourcing, and engineering teams to think about moving from cost efficiency to resiliency and value. And this is incredibly driven by electronics content because of the volatility and the complexity. So getting to network intelligence when it's, a tier one might be outsourced, get to that visibility of that design and understand the scope of suppliers, because every time they're designing in a board, they're designing in a supply chain which that downstream, say, OEM is inheriting, as part of their overall product. We're also looking at more cross-functional orchestration and improved long-term agreement where possible with key, particularly semiconductor and IC suppliers. Infineon, ST Micro, and others have done a really good job both differentiating their product portfolio and working in key markets like in automotive in the EU. but those long-term agreements sometimes are only 20% of the total number of key supplier relationships that are being actively managed, and 80% both of the number of active components and suppliers in the long tail. They're difficult. They may only be managed indirectly through, say, distributors, but that visibility of where that risk exposure is must extend across the entire ecosystem. And the last point is that a lot of this is also a shift in skill sets that's needed, not just in semiconductor manufacturing and design, but in actual engineering and supply chain operations, where there's new ways of understanding kind of data-driven insights, how to make better trade-off decision-making, and really to level up teams that have been chasing parts in execution modes into more empowerment around more strategic trade-off analysis and bringing that next wave of talent into those organizations with the right tools and capabilities to really empower them to be more effective. And really, we look at this as kind of the concept of shifting left inside the enterprise. If you kind of think about shift left was used for DevOps and software, the idea was if you designed a failure or you designed a code problem early on, like a bug, and you fixed it early in the development cycle, the cost of managing at that point of design was 10 times less than after the software was released or the new hardware was released into operation. Well, that same concept of shift left applies to how do we make better decisions earlier, because 80% of a product's cost, risk, and sustainability is locked in at the point of design. So it's incredibly important for organizations to shift left and to empower their engineering, their new product introduction teams to be making trade-off decisions and designing in resiliency where possible so that downstream manufacturing supply chain have more inherent flexibility built into the design of the supply chain and the product at the same time. And we believe that this is really the key to achieving long-term resilience at the enterprise level and the ability to empower decision-making that's more trade-off oriented as your degrees of freedom start shrinking because you're moving into ramp to volume or you're moving downstream in the ecosystem for final production. And as Siemens...
Sorry, Richard, we're a little bit going over time. Could you please,
okay,
can I ask you to speed up a little bit? Sorry.
Yeah, no, I'll close with this, which is, it's really about thinking about how do we configure our products, how do we automate the change, how do we take new forms of intelligence outside in and collaborate, not just within the enterprise, but in new ways of risk pooling with contract manufacturers, distributors, and others. And we believe this is the key to achieving broad, secure, and resilient supply chains across the life cycle of the products. And if you want to learn more, I'm happy to connect on LinkedIn. You can email me directly, and we have a resources section you can sign up for and get more information. So thank you very much for the opportunity to share some additional insights with this great panel.
Thanks, Richard, for the presentation. Thank you, everybody here. So in the interest of time, we'll not be able to do our panel, but we'll have Silvana doing our last remarks. I'd like to thank you, everybody, for being here today, especially our fabulous panelists, and to your audience. And Silvana, the stage is yours for our final remarks and connecting with Alpro session.
Lovely. And thank you very much, Anya. Thank you to our esteemed speakers. Thank you to Stefano Selleri, who our distinguished guest from the European Commission. Can you see the slides quickly in front of you? I won't take up much of your time. We did put together some very brief takeaways. So we wanted to start with that immediately, okay? And then we'll just wrap up telling you how to then perhaps get involved with All Pros. So not repeating any of what the great speakers said, but we will be sharing these slides, obviously. Just for everyone to know, I'm Silvana Marcella, I'm the CEO of Trust IT, with the technical coordinator of All Pros project, a CSA run under the Digital Europe program of the European Commission. So we heard at the beginning from Stefano that there's the recently announced economic security package, and this is going to ensure coordination and support in R&D in the future. CHIPS Act is contributing to the building of 14 fabs. I won't repeat everything that was said. Obviously, we just wanted to pull out the most salient points from the webinar, which was extremely interesting. I'm so glad that we're able to share all the slides. A closer cooperation between the ICT and operational technology is important to leverage disruptive technologies, and that was interesting from your slide deck, Mario, that shift has gone from ICT to operations. I wasn't personally aware of that, so that's extremely valid. From the Infineon presentations, as you might know, obviously skills, as you might know, as we also saw in the Infineon presentation, but the whole element around upskilling or bridging the skills gap is absolutely crucial. And the importance of awareness campaigns. And we've added here that not just for students, so the whole preschool aspect is absolutely crucial. And that's something we want to be working on during All Pros in the next 24 months. The teachers and parents who are influencing the future workforce. So the collaborative effort that is crucial, government, industry, and research on all levels of education. Then moving to the supply chain, the interesting aspects that you, Richard, brought in the presentation now, post-COVID, what the opportunities are going forward, and that it's important that companies look to outside intelligence, where there's a shared ecosystem of intelligence. That was a very nice phrase you said. Quickly then, a couple of minutes, and then we'll wrap up. The overview of All Pros, if you're not familiar, this is what we're doing. We've had 1 year in, we're a 36-month project. These are the partners who are involved at bottom right. For the purpose of today's call, there are a few different elements that are key in terms of our assets. What we wanted to focus on to give you a call to action is the part on a thematic working group on skills and our marketplace. So the marketplace has gone live in the last couple of weeks. We invite those of you who are on the call who would like to showcase your expertise in the semiconductor area to get in touch with us and actually on board. These are the steps you need to go through to actually register. It's very simple, and we're here to help you if you have any questions on how to get involved. The second point I mentioned was about the skills thematic working group. This is going to be launched extremely soon. So we've identified a concept paper on what we actually want to do. We want to be able to then deliver a blueprint where we can introduce a set of different guidelines and best practices on how experts, companies are working on bridging the gap for semiconductors. And so we want to really try and make a dent and have this for stakeholders to make a difference in bridging the skills gap, similar to, obviously, to what was discussed that Infineon is already working on. Many other organizations and companies are doing some excellent things, but we want to be able to pull this information all together and have it in one place in this blueprint to then send out so it can be rolled out on a European scale, okay? More information on this is here, and what types of organizations or other research projects or coordination support actions will be supporting the thematic working group. So if you are interested and you're on this call now, on this webinar, please do contact us. And if you're working around skills and you'd like to get involved and be part of the process and become an author and contributor to this blueprint, we want to hear from you, okay? And then the other part, we want to deliver regular calls. The second issue is going to focus on the skills shortage. Again, if you would like to offer some insights here that would then be rolled out into our blueprint, then again, please do contact for this. And then the last slide is basically how to get involved with us. Please do reach out to us, and you'll be hearing much more from us in terms of the thematic working group on skills in the next few weeks. Aniel, thank you so much for hosting and moderating this. Thank you to our wonderful speakers. I'll let you say the final words before we wrap up. Thank you.
Thank you, Silvana. That was a great view of All Pros, and please get engaged more with All Pros. Thank you. Thanks again to our fantastic speakers. Thank you for sharing your knowledge here with us. And if you're willing to rewatch the session or get the content from it, please subscribe to the newsletter and to the Marketscape of All Pros here, as you've gotten the message in the chat. Have a great day for our speakers on the US. Have a great afternoon and night for everybody here in Europe. Thank you, everybody.
Thank you very much. Bye. Thank you.
Bye
Thank you.
bye.
Bye-bye. Bye.
Bye-bye.